Hey everyone, it's Kim Krompass from the Price Action Traders Institute. Today I want to talk about how to stay in a trade, press a trade, and how to, compound basically your profits in a trade. Can you be profitable without pressing a trade? Yes, you certainly can. You'll trade between levels. But what if you get to a point where you start to feel that you've pretty much got a grip on and a good understanding of the technical aspects of price action trading, and now you want to really develop yourself into a skilled trader? And part of that skill is learning the subtleties and the nuances of reading price action across the board, using that data that you read and putting it to work for you in the market. So let's go ahead and take a look at a real example. I don't want to look at anything hypothetical because I don't believe those really help traders, but I want to actually deconstruct a trade I took on the CAD yen and talk about how I stayed in that trade, why I stayed in that trade, and what the outcome was. What you're looking at here is a screenshot from the New York trade planning session, and it's on the CAD yen. You should be able to see that from the drawing that I did during the planning session, where we actually ask ourselves, what did price do overnight? Where is it now? And what do I need to see price do in order to execute a trade? This pair was in a clear directional move to the upside, and I was looking for further upside movement. How we trade these pairs are we draw a yellow line on a pullback, and we are looking to enter that trade at a yellow line. You can see here was the yellow line that we drew. And I was looking for price to come through these highs at 84.34, make a move into 84.50, and then possibly look for acceleration into 84.80. So let's see what actually did happen. So this is a screenshot of my actual trade here. So you can see that, again, price was in a clear directional move. I was looking for further upside movement. We had drawn the yellow line. Right when I finished the session, I punched into this trade. Didn't get a great fill, but here's the entry right here on this green line. And I was filled on this trade at 84.09. So my entry was 84.09, and I have a 12 pip stop down here. So you can see this is where it gets fun. Been sitting in this trade, it's been bouncing around for about an hour, and then boom, we get this big move. And of course, when I see a big move like this, I go instantly right to what? Look and see if there's anything to confirm that move across the board. And there sure was. There was moves across all CAD pairs yesterday. Some of you may be saying, well, okay, that's great. You got in over here. Price kept bouncing against it for about a half hour. Then it moved off of it. Then it came right back down again to your entry point. Why would you stay? Well, the market really hadn't begun to move anywhere. So I was using price action data at that point to gauge whether or not I wanted to stay in. It wasn't moving. Nothing was really moving. And then out of nowhere, just out of I think there may have been a tape bomb. It doesn't really matter why. The point is you want to be positioned so that when and if these types of things happen, you're in. Okay? So here's where it gets exciting. We see that price now breaks this high at 34, just like we're calling for. And this high right here got as high as 84.49. So it didn't quite go to my first target, which was 84.50. Okay, but it came up to 49 and sucked back about 15 pips to 84.34 at those highs. And I had moved my stop up now to lock in about 6 pips. So I could cover the costs of the trade and maybe bank a pip or two. And you're probably wondering, well, you got in at 84.09 and it got as high as 84.49. Why didn't you take 40 pips? Well, the reason I didn't was because, again, out of the blue comes this big spike. This spike is now confirmed by other price action across CAD pairs. I want to stay in this and see if I can work it. So I'm going to stay. And I'm willing to only take 6 pips to cover costs and maybe bank a pip or two. I'm okay with that. Let's see what happens. Now, at this point, this is where it gets really exciting. So remember on the last screenshot, right around here, price got as high as 49. So we broke those highs. The next candle, we make it through and we tag 50. We come back a little bit. And now we get this beautiful price acceleration up into 84.80. So now we've hit 84.80. So I move my stop right here. You can see the stop is now moved up. And at this point, I'm locking in 55 pips. I'm thinking, wow, this is a great trade. Up to 84.84, that's about, what, 75 pips. And so now I'm going to lock in 55 in case this thing decides it's going to whip around and take me out right here. And I would have been super happy with a 55 pip trade. But again, price is still moving across the board. In fact, I was in the dollar CAD and also the ECAD because the move was so strong in the CAD pairs. So I want to see how far I can take this thing because I know my next target on this is going to be up at 00. And then I have a limit set up here at 85.20. Because often what will happen, once price gets to the 00 level, you'll see price accelerate and it'll punch all the way right up into 20 very quickly. So I wanted to be prepared in case that happened. Either way, though, I was locked in this trade with 55 pips no matter what happened. And finally, this is what we're looking at. So again, here was my entry. We broke through 84.34. That was our first move. We finally hit 84.50. That was our first target. So from 84.09 to 84.50 would have been a 41 pip trade. And then the next goal was up at 80, right? Which was reached up here. And then price kept marching up. And as price marched up, I kept moving my stop. I went from plus 55 that you saw in the last screenshot to plus 60, to plus 63, to plus 65. I kept dragging that stop up as this trade worked. And during this time, I also hit a limit on the ECAD for, I think it was a 60-some pip trade. All right, so I was looking for, again, I was looking for price to come up here into 85.20, accelerate through 00, and hit 85.20. So what did happen was price got as high up here, right here, to around 85.13, and it pulled back. But before it pulled back, I decided, you know what, geez, this trade now is over 100 pips. I'm going to move my stop here, and I'm going to lock in 93 pips. And so that's what I did. But in fact, once this started coming back, I decided, you know what, it's probably going to go hit my stop, so I'm going to take 95. So I actually jumped out with plus 95 pips on this trade. So let's recap. Our trade plan called for a clear directional move to the upside. We were looking for further upside movement. We had a yellow line entry that we planned for during the New York trade planning session. That entry was filled. And then price, we were looking for price to break the overnight highs at 84.34 and make a run up into 84.50. We hit 84.50 and then price accelerated again up into 80. So we had price points along the way to either book profits or stay with it. The reason I stayed with it again was because at this point in time, there was price action data across the board that was confirming this was a CAD move and it was really strong. The why doesn't matter as much as are you positioned and can you take this trade? So even if you didn't get 95 pips, if you had just taken from through this first break through 34 into 50 from 84.09, you would have had a 41 pip trade. That is a super trade. When you get really skilled and confident and you're able to take in price action data from different pairs and actually put it to work for you, this is when and how you can actually press a trade. Now, this doesn't happen every day, but when it happens, you want to be ready. All right, so I hope this helps you in your trading this week and next week and as you go through your trading path. All right, so this is Kim Krompass from the Price Action Traders Institute. Hope you have a good evening.